Okay, so today our lesson is about the chart making, how the chart making is working in the market, and how we can understand those all points. Let's understand first ascending and descending sequence order. This order is very important to understand. Because of this order, we will understand the momentum in the market. So, momentum, what we will understand from the ascending and descending sequence order, I'm writing here. We will understand momentum when buyers stop, when sellers stop, when buyers start momentum, and when sellers start momentum. So these points we will learn from this just a one sequence. This is a one type of algorithm in the chart making. And this algorithm is used by the stock markets to create a price chart. So we need to understand this, and it is very, very simple. Okay, let's understand these numbers. Look at increasing numbers in order low to high is called the ascending sequence. Which are the numbers? 1, 2, 3, 4, 5 means the number is increasing. 1 to 2, 2 to 3, 2, 3 to 4, 4 to 5. There are the number are increasing. This ascending sequence we will put into the candlesticks, and then it will give us information about the candlestick. Now these are the number to understand, but we will use these numbers in a candlestick. Maybe sometimes you will find a 135, sometimes 14, and decreasing number in order high to low is called the descending sequence. Like, for example, 5, 4, 3, 2, 1, 5, 3, 1, or 4, 1. So this sequence you need to keep in mind that sometimes the buyers, when they increase momentum, which sequence they will use, and when buyers decrease the momentum, which sequence they will use. There are two sequences only, ascending and descending. Here in this chart, you just to understand, buyers enter, then sellers enter. Buyers enter 2 times, then again sellers enter. Buyers enters 3 times. Now just understand what the sequence is creating. 1, 2, 3 means number is increasing. One candle, then it's increasing with a 2 candlestick. Then it increasing with a 3 candlestick. And when it increasing, it creates a high. When again it's increasing, it creates another high. High, then another high. Then again another high. So this is called the momentum of the buyer. This is what called the momentum of the buyer. Or we can say the buyers are in a momentum. So when we find the momentum, the always momentum have an extreme point. Always momentum has extreme point. So when you will find minimum 3 candlestick, what is the level? Minimum 3 candles to maximum whatever, maximum so on. So this is the extreme level is generated. Now after this extreme level, it is possible buyers make a stop. So we will be aware when 1 and then 2, then 3 candlestick appear by the buyer, we will identify that momentum is extreme. Now it is possible buyers make a stop. So we will find the another way right now here. Okay, after understanding this one, now understand the second point. This is a increasing momentum. So here again I'm writing chart showing increasing momentum. Okay, another chart will show decreasing momentum. So this is showing the increasing of momentum. On the next candlestick, on the next chart, you can see here. First, the bias comes with a 3 candlestick. then comes with a 2 candlestick, then comes with a 1 candlestick. Now, this is what showing, it is showing the bias decreasing the momentum. Bias decreased momentum and stopped. How to understand the stopped? Stop means one-sided, if there is a red candle, another sided is a red candle. The buyer is alone. The buyer is alone between the two red candles. That is called the buyer stop. And before the buyers are too many, like a two are more than two. If the buyers are more than two, then one buyer is closed between the one seller and another seller. So this is called the buyer's stop. So this is called the buyer's stop. Before there was a momentum, after that momentum slow down. Here we can say the extreme momentum. And then after that, here you can find the momentum is slow down. And here the momentum is stopped. Here we can see momentum stopped. So these points you have to identify all the time in the market, in the chart. Momentum is stopped. This is showing the momentum slow down. Why? Because before the momentum was extreme. And if we find the numbers that this is a sequence, the 3, 2, 1, it's a decreasing. The 3 is a higher number, then it's a lower number, then again it's a lower number. 1 is the point where the buyers will stop. And then after that, the sellers will start the market again. Like they now, you can find just a sellers, a one seller, and now there are two sellers, one and then two sellers increasing the momentum. Why they are increasing the momentum? Because buyers told that we stopped. Buyers stopped, sellers increasing the momentum. This is a way to identify that who is in a momentum, what is their momentum, how they are starting momentum, how they are increasing momentum, when they are losing momentum, when they are stopping, when another party is starting. So this is a way to understand the price movement with the momentum and with the losing of momentum. So these points are very important to understand the information in the chart. And now on the next slide, how we are just focusing on the stop of the buyer and the stop of the seller. So if on this slide, if you can just look, bullish candlestick stop and bearish candlestick start. So these points are both are different. One party is stopped and another party is started. Okay, let how, if you can see, the bias is 1, then buyers are 2, then buyers are 3. After that, sellers started. Why is how started? 1, then 2, the sellers are started. Before 1, not started. 1, not started. 1, not started. 1, then 2, they started. And now you after the sellers started, you will see the buyers will enter for 1 candle and then the sellers will go down for 3 candlestick. So if you find the 3, then 1, 3, then 1, 4, then 1, 5, then 1, 3 or 2, then 1, or it is called the bias stop, or it is called the bias stop. So here, if there are 3, if there are 4, we will count same thing. If are 5, count same thing. 2, count same thing. The 1 candlestick between the 2 sellers, it is called the bias or stop. So this is very, very important point to understand. Why? Because we will learn the strategy from the buyer stop. And after the next slide, you just look at here, the sellers are in a momentum. The 3 candlestick of the sellers are in a momentum. Then the 2 candlestick shows the sellers are slow down. The momentum is slow down. And the 1 candlestick shows the momentum is stopped. Once the momentum will be stopped, in the first time when the momentum will be stopped, then we will draw the line here, line of support. This is called the seller stop support. This stop support is a signal to trade. Next time when the price comes back close above the level, the next candlestick will be reverse. Likewise, if you focus the buyer, 1, then 2, 2, then 3, 3 buyers. Why? Buyers are extreme. And we found the seller bias again start the market, appear here, and then the sellers, they stop with the 2 between the 2 sellers. Means this is a stop of buyer. They create a resistance. So now the price is here. If the price goes break this one or close under this one, market will be reverse back. If the close above this one and break this one, market will be reverse back. Like look at here, the price closed on this one. Immediately we will buy the 1 minute candlestick. The next candlestick will be the green. So this is a strategy of stop SNR and stop SNR of the buyers and stop SNR of the sellers. This is very important. In this sequence, we learned the momentum of the buyer, how they are increasing the momentum and how they are losing the momentum, how they are stopping the momentum and how they are starting the momentum. So this is very important concept. Hope you both of you understood this concept, because in this concept you will be able to read the market. Now after that we will understand another point that is called the reference sequence. Now there are some more sequence, more algorithms in the market. These algorithms giving us information that what to do in the market and how to read the market, what to do with the market and how to trade the market. These all the sequences are giving us information, giving us signals like reference sequence. For example, we understood about how the buyers is stopping and how the sellers are stopping. So if you can find there are momentum of sellers, these are called the sellers momentum. And then you found the buyers enter, and then you found the sellers are stopped. This is the 4 sellers, then 1. It is called the sellers stop. Sellers stop, we are counting as a reference number 1, that one time the sellers are stopped. And again, we found the second time, again, they are single. One time they are single between 2 buyer, second time, again, they are single with the 2 in between the 2 buyer. So this is a similarity. The similarity number 1, the similarity number 2. This is a similarity number 1, the similarity number 2. The both time they are similar, and this similarity we will trade in the market. Next time when the sellers will enter in the market, immediately we will go with the buy, because the market will follow the 3 times similarity. Like sellers enter, immediately we will ready for the buy. This is a reference number 3. And this reference 3, the next candlestick will be the entry candlestick. Here we will buy, immediately market will move up. When this type of reference we will understand, you need to understand this point, that this point means there is a pattern. This pattern will not work. Why? Because the reference is telling that the sellers don't have a supply, they are not in a momentum. So that's the reason this pattern will be failed. Now, yesterday in the previous class we understood about the patterns, that when it will work, when it will not work. Means these sequences will tell us that when the pattern will work and when the pattern will not work. So here this pattern will not work here. So that's the reason we will go with the buy, counter buy. And the examples of this one, if I show you all the examples, let's see. See this one example. So here, to read these examples, just to understand that the sellers was 2, they stop with the 1 candlestick. So the sellers are stopped. One time they stopped. Next time they told we don't have a supply. The third time when the sellers will enter, immediately we will go with the buy. That will be the win trade. And most of the time, these patterns are appearing in the market. And there is another benefit. This pattern we are not trading. On this slide, you can see the buyers have a 3. They have a 3, then 1, means the buyers are stopped. Again, they stop. They don't have a demand. Again, they are single. They don't have a demand, because the 2 times they are single, the third time will be single, and we will go with the sell. But one thing, keep in mind, what is the important? If you go with the sell or not, it's up to you. But you need to understand that this pattern will not work. This is a engulfing pattern which will not work. If it will work after the retracement, it will work. This is very important point which we need to notice. Here you can see the same thing. A lot of sellers stop, again sellers stop, again sellers stop, then we will go with the buy. 3 times we are following the 3 same things. Here, 2 buyers, then 1 buyer. Stop, again the 1 single buyer, and again the 1 single buyer. We go with the sell. Here, 2 buyer, then 1 buyer. Remains again 1 buyer. The next time we will go with the 1, after 1 buyer, the next candlestick will be the red candlestick. So a lot of examples are there. These all examples you have to watch and understand that how they are working and how you will follow in the market. Let's identify the another sequence. That the name of that sequence is called the similarities. Similar sequence. Similar means both are like equal, are equal in a shape, are equal in a value, like that. So here you just to look at the candlestick, one green candlestick, and then you found a two red candlestick. Then again, one or two green candlestick, we found the two red candlestick. We need to identify, we need to find what is the similarity between these candlesticks. The similarity is this one. Last green, two red. Last green followed by two red. This is the similarity. If the two times the similarity will be appear in the market, the third time will be the similarity will be appear in the market. Like here, you just to look at this is a bullish candlestick followed by two bearish candlestick, bullish candlestick followed by two bearish candlestick. And this bullish candlestick, if follow one red candle, we will expect the next will be the red. So we will trade the next candlestick is a sell. And in that, we able to understand that this pattern will work. Also, the bearish pattern will also work. Means the bearish pattern is working with the help of the similar sequence. So this is the algorithm of the market. We need to remember and focus on this algorithm as well as. And the another sequence is called the random sequence. This random sequence is also very important sequence. Look at this sequence. There are buyers and then sellers. Buyers and then sellers. What is the similarity? That some point is a similar and some point is not similar. Like here, the last green two red plus one red. That is a little random. 50% there is a similarity, then 50% there is a random point. But we will expect that if the next time the sellers will enter in the market, and then we will follow the sellers. So the examples of this one, that I'm going to identify. Look at this one. Here I have drawn the setup as well as you just follow. Look at this is a point one. This is a point two. We are trading the point three. Means once the buyers enter in the market, and then we are trading this candlestick. This is a buy for 1 minute if you're using the 1 minute time frame. And this is a random sequence. Here you can find this is a trade here. Last green, two red. Last green, two red. And we expect the last green, then there will be two red. So after this candlestick, we have to trade. You can see that trade is win. And if you find that last red, two green. Last red, two green. Then last red, it will be the how many green? Two green. We will trade this one as well as. Again, you can just, this time we are not following. We will follow only just from here. This time we are not following. Only just 1, 2, and trading the 3 only. Here you can find. Last green, 2 red. Last green, 5 red. So we can expect the last green minimum 2 red will be there. After red, we will go for the sell. And if you find the similarity here, the last green, last red, 2 green. Last red, 2 green. The last red, we will trade this one. It is here it's a win, and here it's a win. And you can find $190 in a one entry. This is a little bit different. Here you can just find the last red, 4 red, last green 4 red, and last green 2 red. The last green 1 red when appear, we will go with the next red. Even there are other setups are working. Here the reference sequence is working. You can see the single red, next candle is green. The single red, next candle is green. The single red, the next candle will be the green. So we can trade this candlestick as well as only one time, and then we will leave these all other setups. So to follow these sequences, here this one and no, not this one. The 2 or 3 examples are not aligned with this strategy. See here, this is working. Last green 3 red, last green 2 red. The next time the last green, it will be the 2 red. We can go with the sell. It's a win, $100. Here also. Here also. This is sometimes different. Because there's a using the trend line, only just taking the similarities on the trend line, but this is a little bit different, so we cannot trade. We only just follow the Similarities are random sequence. This is a very good example. Last green, two red. And last green, two red. And last green, two red. It's a win. Likewise, there are a lot of examples here. One by one, you have to watch, and one by one, you have to identify on the chart as well as. These are a lot of examples you have to find. So this is for today. Is there any confusion, brother? If there, yes, then just to tell me, I need to clear that confusion. Or any confusion from the previous lesson, then I can clear. Yes. David, is it clear? Everything?